What's up, guys? I hope you're doing well. So, one of the things that's always been kind of in my mind in a way, really ever since I read the book The Demographic Cliff by Harry Dent, is kind of incorporating demographics into what I'm thinking about things, whether it be in terms of like investments or economic factors or whatever. Actually thinking about, it's like where are people moving? What are people doing? How old are they getting? What are birth rates? What are debt? Stuff like that, right? Um, and so I actually found I guess, report or whatever you want to call it on the Cleveland Fed website. And we'll head over to a screen share to just kind of talk about the data and stuff because it's actually pretty interesting what they did. Um, so let's see here. All right. And then let's see for you guys, is that too small? Probably. Let me zoom in. Oh, maybe one more. See if that's even better. Yeah, that's good. I think you guys can see that. Okay, so the size of the U.S. labor force declined by 2.3 million people between December 2019 and December 2021. So 2 years, 2.3 million people out of the labor force, right? And then this sparked widespread debate about underlying factors constraining this labor supply. I mean, I don't know about you guys, but that's the help wanted signs are everywhere, at least from where I've been going. Even with me traveling for work so much, like pretty much the entire month of April, I was out of town for work, traveling literally the entire South, like I guess deep South, from Louisiana, Mississippi, Alabama, Georgia, South Carolina, and Florida. Um, literally working in all of those states for the entire month of April. Um, every town I went to, there were many help wanted signs. So it's that's at least that's the trend here in the deep South. But apparently it's everywhere too. So broadly speaking, changes in the overall size of the labor force come from changes in labor force participation rates, changes in the demographic makeup of population, and changes in the size of the population. So it's like there's multiple factors. And they list three, like you have to have people in general. Why is my throat? Sorry, excuse me. It depends on the makeup of that population as well, like how old people are, where, like I was saying a minute ago, and then how many of them are actually, like participating in the labor force. And so just to keep in mind the actual definition of labor force, right? So it's defined as the number of people aged 16 and older who are either employed or unemployed, where unemployed is defined as not having a job, being available for work, and having actively searched for a job in the past 4 weeks or waiting to be recalled from a temporary layoff, right? Um, so, from my understanding, most of the time it's this 4 weeks part. So, like if you've been unemployed for 4 weeks and you're not looking for a job, you're no longer considered in the labor force, um, which is kind of a big deal. Um, So the changes in the actual labor force participation rate, it's been in decline for a while, it seems. The men's labor force participation rate has drifted downward since 1950. That's over 70 years. Between 1950 and 2000, this decline was offset by an increase in women's labor force participation rate as women became more of a factor, I guess, in the labor force. However, this even women's rate peaked in 2000, and the overall labor force participation rate for both men and women has trended downward since, right? And so now both genders are just going, they're participating less and less for the past 20 years or so. And so this fell sharply the past couple years, and has been slow to recover, falling from 63.3% to 61.5%. Um, and then rising back up to 61.9% in December's of the past couple years. How this has changed in the actual demographic makeup of the population. So as life expectancies have risen, the percentage of the U.S. population aged 60 and older, the most likely demographic to be retired, rose from 16% in 2000 to 24% in 2021. The percentage of population aged 60 and older has also increased because of the large baby boom generation started reaching this age in 2006, right? So I guess it kind of gives credence to the whole I don't know what you really would call it. Like a lot of younger people, the whole like okay boomer trend or whatever it was. Sorry, even though I'm kind of in that demographic, I never really participate in those kind of things. I just don't. I don't know why. I never really have. But anyways, the unusually large number of retirements in 2020 and 2021 can be attributed to both a drop in the labor force participation rate of people aged 50 and older, or 55 and older, and the large number of baby boomers reaching peak retirement ages. So it seems like a lot of this too, from this perspective, in terms of the demographic makeup, what's happening is the baby boom generation is reaching retirement age, obviously. And so you have one of the largest generational cohorts in human history, pretty much, or at least in American history, reaching retirement age. And then also with the past couple of years, there have been a lot of people retiring early. As you see it says labor force participation rate of age 55. So they decrease the age and so 55 to 60, right, are those people who typically they're getting close to retirement age, and so they kind of just decided to retire early with everything that's going on, which is like, who can blame them? Especially with, I guess one way you could think of it is with asset prices being more how they have been for the past few years. It was kind of it aided in that decision, right? So where the prices of their houses, the prices of their investment portfolios, whatever they may have increased drastically, right? And so that really helps with the whole being more comfortable in retiring when you have a much larger balance sheet, um, regardless if that's just on paper or not. So changes in the actual size of population. This is one of the things that I have been coming more in contact with recently. In terms of the United States, from my understanding, it's been going on in Japan for decades. But, however, since 1972, the U.S. total fertility rate has been at or below the fertility rate at which the population replaces itself from one generation to the next, right? Assuming zero immigration. Um, and that's from Chappell 2021 and World Bank 2022 for those citations. As a result, the size of the birth cohort reaching working age, roughly 20 through 29, my age demographic, has been converging with the size of the birth cohort reaching retirement age, 60 to 69, thereby limiting the growth of the labor force, right? So there are more people the amount of people retiring from the labor force and the amount of people entering the labor force are pretty much the same at this point. And they go later into, I think it's this 2060 differential that we'll get to in a second, that really kind of defines this closer. Right? And so, in fact, there were fewer people born in the United States between 1992 and 2001, my birth cohort, or those who are now 20 through 29 years old than between 1955 and 1961. So there's almost 2 million people less in their 20s than there are in their 60s. So the net change in U.S. population because of in and out migration. Oh, this is where they're talking about immigration, right? Where immigration fell from 6.5 to in the 1990s to 3.2 in the first half of the 2010s. Um, and here's that 2060 differential, where it's basically it's the percentage difference between the population aged 20 through 29 in their 20s, and then the population in their 60s. And generally, the smaller this differential, in percentage terms, the net flow of people into the labor force is likely to be, right? So the smaller the differential, the smaller the net flow, right? And so this is, it's, speaking of smaller, it's been decreasing this entire time. And we actually see, because they only did it specifically for some states, and then they did like the United States as a whole, at least on this chart. And you see that West Virginia and then Pennsylvania, the past year have actually been negative, where there's literally more people retiring than there are coming into the labor force. And you can see with the United States, it's been decreasing as a whole from looking like it's peaked in 1980 at like, we'll just say 120. And then now, 40 years later, it's below 20. Yeah, it's below 20. And so that is 20% of what it used to be with this indicator. And this range, the shaded area shows values from the 25th to 75th percentile of the distribution, right? So that's the distribution of all the states. So yeah. West Virginia had a -1. Same with Pennsylvania. And so the growth of the labor force varies substantially from year to year, with the labor force typically growing more when the economy is strong, such as in 2018, and growing less when the economy is weak, such as in 2009. However, the long run trend in labor force growth is strongly correlated to this differential. And here's kind of a chart showing this, where you have individual years of where it kind of fits on this distribution. And then the line, I think, is the line of best fit. The line shows the predicted value from a bivariate regression of percentage change in labor force on the percentage difference between populations, the 20 and 20s and 60s of what we've been talking about, right? So just kind of showing us, okay, let's see. So the percentage difference between population. So this is your differential, and then year-over-year percentage change in labor force. So we see as this differential increases, so does the year-over-year change in labor force, right? And you can see by the numbers kind of where this is aggregating, right? And so you see up here on the top right where we have both the differential and the labor force at the high mark. It's you pretty much always see the 1900 states, and you don't really see 2000s until about here with 2001 and the early 2000s, which is still relatively on the higher end of this line. And then basically you get down here and it's pretty much all recent days or recent years. So like 2010s and above are all like on the lower end of the spectrum. So that's interesting. Let's see. The first is that, oh yeah, so two interesting facts can be shown by this. So this differential has been unusually low in recent years, as I was saying, with like you can see the numbers of the years. Like 2010s are pretty much all down here, and then the early years in the 1990s and 1980s are pretty much all in the high end. And that it's consistently above 85% between 1970 and 2000, but has been below 50% every year since 2009. The second kind of important thing that you can see with this is the labor force growth in 2021 was close to what one would expect based on this alone. As you can see, I guess that's an important fact, because it's basically right on the line, but it's also like there are 1, 2, 3, 6 to 8, depending on how lenient you want to be, that are actually on the line from from the past 50 years. So that's just under 20% are actually on this line. So I guess you can say, like, is that really a correlation, or is that more of, I don't want to really say coincidental, but still. Anyways, um, conclusions, based on population projections of this differential, will remain near 10% through 2040. That's still almost 20 years of being at the very end. That's basically projecting it'll be even worse now, um, unless they change the model in any way. So therefore, we should expect these demographic trends to limit growth of the labor force for the foreseeable future. In other words, 2021's slow labor force growth may not be an anomaly, but rather a harbinger of what is to come. Slow labor force growth typically brings with it slower employment growth and unless demand for labor falls, increased bargaining power for workers, right? So basically, I mean, we're getting to a point to where now it's like, labor's having the upper hand because they don't really, I don't want to say they're not as easy to replace. And obviously when you get into this stuff, it becomes very nuanced depending on industry, how deep the market is, whatever it may be, right? It's very nuanced and so on. And that's one of the things you kind of have to realize when you're talking about major, like, macroeconomic indicators. Like, we're talking about literally billions of people, right? And so you have to bring in that nuance to a certain extent if you want to apply it to a specific industry. But seeing general trends and making kind of long-term predictions or understanding kind of long-term dynamics, this is entirely helpful, and it can help, and it's very helpful for, like, narrowing stuff down, right? So, especially considering that, I mean, according to this, pretty much believe that it's pretty much going to be down on the very low end of this period. And I mean, if it gets much lower, we're pretty much at zero. Like, it looks like we may or may not be, like, barely above zero now. And so if we actually get down to 10%, that's probably like just below zero. And then we're talking about negative in terms of year over year percentage change in labor force, to where the labor force is actually shrinking, right? And that's because this differential would be negative as well. But yeah, and have footnotes with the references and so on. Links to, if you guys want to actually look at the individual studies and such as and reports and stuff. But yeah, demographics are important. You never know when. I mean, they're important. It's pretty much all you could think about. What is that saying? There's a saying. It's like, show me demographics and show me policy, and I can show you the future, or whatever it is. There's something along those lines, because if you have, like, where people are, and then you have what kind of the policy governing those, then you can more or less kind of at least get the general trend of where things are going in the future. But yeah, just some thoughts and some. I mean, you got to keep this stuff in mind. Now, it's not going to. When you're talking about something like, as I guess, as big as demographics, I don't really see how it would make a short term. It doesn't really have much weight. I don't feel like it's the. Or I don't think. Keep that in mind. That's one of my pet peeves that I really need to get out of, is the whole, like, saying I don't like how we say, like, I feel for everything. Are you feeling or are you thinking, right? But I don't think that something like demographics is very applicable, or it's not I guess it shouldn't be the most heavily weighted factor in short-term decisions. However, as you kind of extend your time horizon to longer and longer, like, say, decades or whatever, maybe like 10, 20 years, especially, like, the further you go out, the more you should kind of weigh demographic factors in terms of decisions and stuff. I think that's kind of, I don't know, it seems kind of more like common sense too, because that's really what the demographics are saying, because we're talking about people aging, right? And so, at least in some respect. But, anyways, that's just kind of me going on about demographics for a little bit. And the Cleveland Fed website, now it kind of, in and of itself, it kind of looks kind of, it's not the Fed's prettiest website, but it seems to have actually like a lot of really good information and stuff that's really helpful. Like they have infographic sections and a whole bunch of other stuff. I'd highly recommend looking at this at their website for things. It's pretty interesting. But anyways, that's all I got for this one. So I hope you guys have a good night.